All right, everybody, let's do an audio check, audio visual. How's everybody doing tonight? Come on. I haven't even looked at the markets all weekend other than today. Haven't even played around with my mic or my setup. I kind of just push the power button and go. Doesn't that sound like a roaring kitty? Is that what? Man. Great. Sounds good. Looks good. Fantastic. It always feels good after a weekend and things start to work out good. So let's just get started. It's Monday night and let's just dive into it, right? So anyway, welcome everybody. Welcome to Slow Markets. I'm Coach Dakota, Coach DBA. As always, there is our Topstep risk disclosure. We can see the live markets behind me, and this is for educational purposes only. This is not a signals class, guys. Trust me. I'm not that great of a trader to feel like I'm going to be giving signals, right? We all click the button buy and sell at our own risk. And I'm not the best. I really am not. I've been going through a drawdown from my high water level for the past, June, pretty much the past 10 days since we started June. I'm down about $45,000 in the past, I'd say a little over 2 weeks, but which is fine. I look at things from month to month, and we'll go over that at the end, where we go over statistics, where we go over a payout. So if you're curious, stay tuned. I see there's only 100 traders. As always, traders are starting to go through. But I promised traders, and I promised myself, we'll take a look at gold first, because every single time I start gold, it starts to sell off. Oh my gosh, man. What is up with this? That's exactly what happened, right? I start slow markets and gold just dumps. Well, there's the signal to sell gold is as soon as I start my stream, we sell off in gold. Wow. Okay. Well, there we go. My signal for short gold is when I click start stream. So does that mean I should short gold and then I start the stream, or is that called insider trading? Seems like, and you guys probably know this more than I do, like how often has this happened? Like this has been happening pretty frequently whenever I switch to gold during like right as I start my stream, we get a sell-off in gold. It's kind of interesting. It's going to be something we pay attention to. I don't know what it is. I don't know. I can't be it. It 100%. It's not me. It cannot be slow markets. It's maybe something to do with the time, right? 9 p.m. Eastern, 8 p.m. Central. There's maybe just someone out there just shorts gold. It's definitely the time. Let's see how it plays out this week. Every single night before I start the stream, let's start off looking at gold and just see what happens. It's really interesting. Someone says it's China. We'll pay attention, right? And it's just a quick scalp. It's not anything big where we're going to hold this overnight, but it just seems like at that time, it goes down. We'll watch it. We'll watch it. Tomorrow night, I'll do the same thing. Maybe we'll start off with gold. When I open up the stream, I'll have the gold chart and see if we notice anything different. Now that we're going to be watching it, we're probably going to have gold not do this. It will do the opposite. But now that we've seen what happened with gold, let's start our normal. Let's do our what are we calling it? Our rapid fire. Our rapid fire for the markets. So let's start with the Nasdaq. Here's the Nasdaq daily chart. We're in consolidation mode once again. We don't have any big news until what? Thursday? Thursday, is that the big news? Let's take a look at the news. So I am not seeing anything really big until Wednesday. Correction, Wednesday is what I'm seeing. I see we have core CPI, regular CPI month over month, year over year. So Wednesday is when the news is starting to hit, and then we have FOMC. It's going to be a big Wednesday. So we're going to see a lot of volatility on Wednesday, And again, on Thursday, we have core PPI. And then we're going to finish off the week with consumer sentiment. So Wednesday, Thursday, and Friday, mostly Wednesday and Thursday, is going to be a very volatile day, I believe. Yeah, jobless claims. Do we have jobless claims? Yep, of course. Unemployment claims Thursday as well. So here we are Monday night. There's not really much going on tonight. We have a little bit of pound news, and that's it. So not really much. And that kind of makes sense when we're looking at this market and we're seeing how we had this huge rally on the 5th, and then consolidation pretty much these last 3 days. And the way I'm seeing this is we now have a main candle that I'm going to be watching from the high of, like, say the 7th, right? This is the candle that I'm going to be watching, is the 7th. If we break above this high or below this high, that could signal something. But anything inside this, I'm going to be considering consolidation, and consolidation strategies are at play in my book. I'm going to be looking for consolidation strategies where, you know, we sell these highs, we buy these lows. And then if we zoom into a 60-minute chart, we can see that a little bit better. So let's zoom into a 60-minute chart and let's take a look. Consolidation, you can see we had an ugly consolidation there on the 6th. This was a bigger but ugly consolidation on Friday. It took me apart. And then kind of today, I mean, we kind of rallied at the end of the day, sold off, but ultimately I would say this is consolidation. We are hovering around the key $19,000 level, you know, plus or minus 100 points, where it's fair to say anything down at the bottom of this, it's worth buying. Anything around this upper zone, like everything's in zones, right? This bottom zone, it's, you know, attractive to buy. This upper zone, it's attractive to sell. We're consolidating. Maybe this is a decent strategy until Wednesday. So I wouldn't, maybe we go into that. I like this. I like this type of a strategy until we get the big news on Wednesday. Now remember, anything can happen. It's Monday night. Monday night. We'll have Tuesday and then Tuesday night. But I would not be surprised if we sell back off down to 19,000. We consolidate. We have more chop, and then everyone's just kind of sitting on their hands, waiting for the FOMC and inflation data near the end of the week, middle end of this week. So that being said, as we start to analyze where we're at now, let's look at this. So we went up near the end of power hour. So we had that nice little rally at the end of the day. During the New York session, we rallied up to this higher end of the zone. So we went up to, you know, what was the high? 129 and 3/4. And then immediately after the close, we've sold off. We've sold off all the way down to, you know, 1980. And we're kind of struggling to move from there. And it looks like we've had this little bit of a sell-off. So there could be a possibility of a little bit of a bounce back up to these highs. Maybe an opportunity to get short and see if we could have a move down to the lows. Not 100% sure. I'm very indecisive when it comes to this. Essentially, we just want to look for areas to short it when we get up to these highs and areas to buy it when we're down at these lows. Yeah, that's all I have for this. We'll continue to watch it. Let me zoom into a 5-minute chart, and then we'll move over to crude oil. And yeah, that's kind of what it is, right? We had this nice little sell-off right before slow markets, and now we're kind of just consolidating right here. Struggling to break below 79s, break into the 70s. We're rallying up and testing the high 80s. So maybe we break down and see the 50s, maybe see the 60s, or we just break up and see this upper range. Now, if we do break up, I would be tempted to look to take shorts, talking about, like Hogue says, cheap trades, where we can take some shorts up into this zone, have a decent tight stop loss, right? Cheap trade. And then look for a play back towards 19,000. And vice versa. Maybe this is tradable and looking for trades, scalps tomorrow morning towards the upper and lower end of this range. So expecting chop until Wednesday. Crude oil. Man, crude oil was one heck of a buy down there at 73s. Now, I remember last week was Hoag's weekly kickoff low was $73 a barrel. And ever since then, we've just rallied and smashed that. We touched 73 and we smashed and rallied all the way up, past $78 a barrel. And there's Anne Marie. I do see everybody in the chat. I just never get time to shout everybody out. So what I'm expecting for crude oil, or what I would like to see on crude oil, is there's a lot of support around this 76 and a half level. So what I would be tempted to see in crude is if we do start to sell off, I would look to buy around this zone again. So I'm looking for this support to become support again. We went up to 76. We tried to sell off a little bit, and then we broke right back up into this range. So I'm going to be looking for opportunities to buy crude oil to see if we could get some type of a pullback, either to the 76s, maybe to 77 and a half, 77 and a quarter, because I do see some support level right here at 77 and a third. So this very well could become support again. And I'm just looking for the market to accept this range where we could find opportunities to get in long and then maybe look for a push back up to these highs around $79 a barrel. Maybe we see $78 a barrel again. That could be a possibility. I'm not sure, but I like that play for crude. I don't want to short crude oil. Every single time we have a sell-off, we've seen a huge bounce. We have seasonality coming into play and a lot of headline risk. So I'm going to be looking to buy the dips around 76.50, 77 3/4, or 77 and 3/10, whatever, 77 and a quarter. There, that's fair enough. Someone says, look at gold. Yeah, we're just kind of not doing much. We sold off. Now we're consolidating there. Now that we're on gold, I might as well just talk about it, right? So let's take a look at the gold in the 60-minute chart. So now this is something to be said. I'm bearish gold, and I'm looking at this as, we had that huge sell-off on May 21st to May 23rd. We consolidated for a little bit. We had a nice rally out, and we tested the key 2400 level. That was a key zone, 2400. We tested it and then immediately sold off. We sold off pretty dang close to $2,300, 100-point sell off or $100 sell off on this. And so now, where do we go from here in gold? I'm not sure. There is something to be said. Back in the beginning of May, we had a lot of support here. So that is something to be said. And it makes sense that we found some buyers here around, the 2310s in this zone. So I'm not surprised by that. That makes sense. It looks like we did break below that just a little bit and then, had a nice little bounce. Essentially, I'm looking at this as I want to be a seller in gold, at least for right now, because is this the same thing? Are we going to see the same thing again? Can we just say copy paste? Maybe we see something again, maybe we see a continuation where gold can just follow this type of a trend. I don't know. That's something I have been watching in gold, is these characteristics. Gold finding a channel and trading in a channel where we, sell the highs in the direction of the trend. We buy these lows. So that's something I will be watching. I'm going to be considering. I'm going to see if gold can get into a channel and see about taking opportunities to sell the top of this channel and maybe find a reason to buy the bottom of this channel. That's what I'm looking at gold right now. Not really. I'm kind of mixed on gold. I don't want to be a buyer or a seller. If I was going do anything. I think that was the trade where we had this huge sell-off. We had a pullback. I would have preferred a pullback up to like 73.40s, where we have a lot of support here. Support will become resistance. I would have much rather that type of a pullback and then look for a short. So maybe we do get that and then look for a short back down towards 2,300. But if you did get in short, that could have been considered a cheap trade, right? Where we had an opportunity to get in short right before slow markets. We were kind of consolidating right around the 2330, high 2320s, where we could have easily got into a short in this zone, in this consolidation, had a stop loss right above it, and then look for maybe some targets at like 2319, maybe the lows. Like that was a possibility. I'm not sure. It's interesting. I'm going to watch this. I'm very curious, guys. I really am. This is an hourly chart on gold, but I'm very curious to see how gold plays out when I start streaming my slow markets. Tomorrow night, I'm going to start class. Maybe if you guys are here and if you guys seen that, as soon as I started class, gold sold off. I'm going to start class like a minute early, like maybe 2 minutes early, and I'm going to have it on the gold chart and see exactly what happened, because this started a minute before my stream. Like as soon as I clicked start stream, gold started to sell off. So I'm really curious. I'm a trader. I love to recognize patterns. And could there be an opportunity? Maybe. Yeah, I know you guys suggested it. You guys called it out last week. And that's why I looked at gold immediately, a lot quicker, right? And so if I start it a minute early and I immediately pop it up on gold, then that could be something that we can watch. We can definitely watch it and see what happens. Even if it's for a quick in and out trade, right? Just a 2-3 minute scalp where I could scalp, some type of a short on gold. And I'm going to test it out in a demo account. So definitely testing it out in a demo account before I ever touch it and do something like that. But it's an interesting thing. Whenever as traders, whenever we see something like this, we want to watch it. We want to monitor it and see if there is an opportunity to possibly take advantage. And it's like another tool in your toolbox. I'm like, okay, you know what? At this time, if this sets up, then there's a good risk reward or a decent trade where if it works out, I have a positive expectancy where I'm risking less than what I'm looking to make. So that is definitely something I'm going to be watching and considering. Next, Nikkei. Ooh, man, this is the Japanese market. I'm going to be continuing to watch Nikkei. Kind of the same thing, right? Kind of the same thing I was talking about the Nasdaq, where we're in a range. We've been consolidating. Yesterday, or today, today we could say we kind of broke out. We've rallied all the way up to near some resistance. It's fair enough to say there's resistance here back on May 19th, 20th, and we rallied all the way up to 2039, like 300s. And now we're starting to sell off again. We're selling off, and let's see. Is this just a pullback and then a continuation up? Or are we going to sell off maybe back down to that key psychological 39,000 level? Because, just looking at the Nikkei, I would consider it's the same thing. In terms of what to expect going into this week, I'm not really expecting a lot of volatility tonight, tomorrow, or at least a lot of, trending markets. I don't expect the Nasdaq, I don't expect ES or a lot of these markets to be trending unless there is something or some reason for it to be trending, because I'm sure the whole entire world and all the financial markets are probably going to be watching FOMC, inflation data. This is the Japanese market, so it's not going to be as pinned to the U.S. market, but the U.S. market tends to be the leader, right? In terms of like, if the U.S. market rallies up 5%, there is a higher chance that like the Nikkei has some type of bullish movement. So maybe there was an opportunity to short this. I don't know. Essentially on the Nikkei, we have been making higher lows and then ever so slightly higher highs. We did break out, so I wouldn't be surprised if we come back down and sell off down to 39,000. But I'm not going to trade it. I haven't traded Nikkei for a little bit. I've been kind of out of the pocket, not trading really well. And I'll go over that near the end of class when we're talking about statistics. We're talking about payout, behind the scenes, trying to become a trader and taking payouts and paying off, like using that for expenses. I'm going to go over that near the end of class. So if you guys are curious, like I said, stay tuned. Probably about 15 minutes before the end of class, We'll go over my spreadsheet every Monday, and then every Thursday, I'm going to go over it in detail. I'll answer questions. We'll go over my trading. We'll go over, what I'm seeing, how I'm feeling, because the past 10, 12, maybe even 13 days, it's been very, very frustrating for me. And then stay tuned, guys, because I'm continuing to talk to the Topstep team behind the scenes, pushing, what can we do? Can we get some stuff, some benefits for the traders specifically and only for slow markets? So there's always conversations that I'm having in regards to that. So the traders that are here for slow markets, I am always going to be looking to try and reward exclusively, but we'll see. Now let's talk about ES. ES has been something I also have been watching. I've been watching ES a lot more because it's been more smooth compared to the Nasdaq. It's been a lot easier price action in terms of where we're putting our stop losses, how it's reacting, what we're expecting, and just ease of trade overall, I suppose, in terms of risk management. And maybe that's something I might be switching to during the New York session. I'm not sure. I've only been watching it for about 2 weeks. I want to watch it and continue to watch it for about a month, and then kind of make a decision whether I'm going to focus a little bit more on the ES. But as you guys could see, comparing the ES 60-minute chart, compared it to the Nasdaq 60-minute chart, it's a lot less volatile. It's a lot less, it whipsaws a lot less. As you can see, we're catching a little bit of a bid here on the Nasdaq. A bid is in 6 points. That's pretty big for a fast markets, where we are starting to kind of hold that pattern, right? Where it's maybe we're just consolidating in a bullish flag. Maybe we make a bullish flag. I don't know. But we're down near the bottom. 19.080s, and maybe we have a 3-bar reversal here on the 60 minutes. And you can see how we whipsawed. And I mean, especially here. Here's a good example. June 6th. Like, look at all of the whipsaws and stop loss. And the closer you zoom in, and we'll zoom into a 5-minute chart as well, and I'll show you. And then we look at the ES, and it's not as bad. It really is not. So Nasdaq 60-minute, there's a lot of wicks. ES 60-minute, oh, come on. It's just, look, not as many wicks. It's a lot cleaner. And so if you're a new trader, and if you ask, what market should we trade, I'm going to continue to say the ES, and I'm going to continue to watch the ES. And if we zoom into a 5-minute chart, I think it's still the same. Like, very, very, very clean. I'm liking the price action. When we break, we kind of hold to it. It's honest, I guess. Maybe honest could be a good word for the ES. I don't know. I'm going to continue to watch it, and I'm going to continue to compare it, understanding like how do I trade it, my position sizing on the ES, where would I be putting my stop loss on the ES, because these are all the things that we need to be thinking through when trading a new market. Just how does it react? Where should I be putting my stop losses? Where should I be getting in? How big of a position should I be getting in? And like so many other things that I could think of when it comes to trading a new market. We just don't want to jump in and say, all right, getting long because I think it's going up. Maybe just demo account test it, maybe a combine, and I'm not really sure. Like right here, just going through this right now. And this is a 5-minute chart, and I'm going to kind of just, let's just take a look at an example. Like we kind of see here on the Nasdaq, do we want to say this? I don't know. Like here's the Nasdaq 5-minute chart, and then we take a look at the ES 5-minute chart, and man, it hasn't really moved as much. We've just kind of, yeah, it's not as volatile, not as ugly, and you could definitely get chopped up in the Nasdaq. That's for sure. Get rid of the Japanese yen. I don't know why it didn't save that. Let's go here. Okay, now let's get to some questions, guys. Now remember, if you guys have questions, I forgot to mention that to everybody earlier. If you have questions, feel free to type them into the chat, and I will get to them. We have amazing moderators who will be, feeding me the questions that I might miss. So let's get to it. Any questions? Type them in the chat. I'll get to them, and then we'll go over some statistics. I'll continue to go back and forth and see if there's any good trading opportunities. On the Nasdaq, I am a little bit bearish. And the reason why I am bearish on the Nasdaq is, we kind of have some support here. We broke down and we're kind of holding below that support right around, 88, like 87, 88. And I am actually might look for an opportunity to see if we can break below. If we could break below, say 79, 78, and we break out of this consolidation, maybe we see a move into like 60s or even the 50s. So I'm bearish the Nasdaq. Does that mean anything? No. I'm a really crappy short trader. It's easier for me to mark the markets, and it seems like when I've been trying to short the market, it's just been taking my lunch money. But that being said, from a technical standpoint, I like it. Okay, Coach, have you ever felt at the end of the road and there is nothing you can do to gain an edge? I am at that moment, tried so many things for years, I'm not sure what to do anymore. So, large banana, have I ever felt like at the end of the road, you've probably watched thousands of hours of YouTube videos and lessons and have been trading in demo accounts and combines, and then you just feel like you could never get an edge? Right? And 100%. It literally is some weeks, some months. It's like that. I'm going through that right now. So here in about 10 minutes, I'll pull up my statistics or that spreadsheet that I'm continuing to follow. I'm going through that right now where I look at my statistics from a monthly standpoint. February, March, April, and May. So in those 4 months, February, March, April, and May, I made $250,000. So 4 months, $250,000, which averages, I mean, you could do the math, right? Where 250 divided by 4. So 250,000 divided by 4. So I average about 62,000 a month. Okay. And then this month right now that we're in, June, I am currently down about 45,000 in my live account here at Topstep. So I am down 45,000. And while I'm in this drawdown, that's how I feel. I feel like, what the heck am I doing? Like, why? Like, I'm not reading the markets. If you guys watched me trade Friday, during fast markets, I was getting into a short. I took a loss and then another loss and another loss. And then as soon as I was done, I'm like, you know what? This market's going to rally all the way up, and then it's going to turn around and go all the way back to where I got in. And sure enough, it did. And I've been kind of like out of the pocket, maybe not reading the markets right, and 100%, being emotional. I'm just like, what's going on? Why am I not like getting these trades? And then a lot of times is some of the trades that I do call out where I'm like, hey, you know what? This gold short looks really good. Or, like Coach Jay and I was on, during Friday, I'm like, yeah, I like a short, right? And like, what was it? Like 860s or 960s. And, went all the way up there. It hit 960, like beautiful trade, turned around and sold off 40 points. And that would have been an amazing trade. But then I was too focused on gold, and I was like not executing correctly. I just out of sync with the markets, guys. And I've been out of sync with the markets. And then part of this as well, and I'm going to go over it soon, is I took a $134,000 payout, and my account balance was at $250. I am taking a $45,000 drawdown, and then I took a $134,000 payout, or yeah, a $45,000 drawdown, and then a $134,000 payout. So what my account used to be, $250,000, and the way that I was trading with my daily loss limit, my position size, and like my profits for the day and my average daily profits, was one I guess way of trading, right? Because I was scaling my account and I was getting into a good rhythm, scaling, growing it, trading bigger, increasing my daily loss limit. And then all of that happened kind of all at once the past 2 weeks. And so now I'm in a position where it's like, okay, you know what? Trading, I need to practice what I preach. I need to practice what I tell all of the traders that I'm trying to help out. Is trading really is just numbers. It's about percentages. I had a phone call with Brett. He probably mentioned it on Shoulder Tap. I wouldn't be surprised if he mentioned it on Shoulder Tap, right? Where he's like, hey, you know what? Your daily loss limit's too high. This is a correct daily loss limit compared for like a $250,000 account, but this is way too high for a $100,000 account. And then as I've started to lose some money, it's like the daily loss limit gets bigger and bigger compared to the account size that I'm trading. And then I've been having conversations with some of my trading buddies, and I'll let you guys on in some of those conversations is, how do we trade a prop account? Do we trade a prop account in terms of percentages? And now this is me questioning stuff, okay, guys? And this is exactly what I was thinking about, is we have our personal account, right, where we have an account balance of X amount of dollars, and if you blow it, whatever. But then we have prop accounts where we don't want a big balance. And just like if you have an XFA, say you have a 150K XFA, and then we start at zero with a max loss limit of $4,500. So technically we have a $4,500 account trading 15 lots. And then we've been talking back and forth of like, okay, what's the right way to trade it? How would I best way to teach scale in, scale out? And there's been a lot of me questioning of how I should be trading a prop account. It's all good and dandy when you're making money, and then realizing, okay, you know what? Equity curves just do not go up and up and up and up. Equity curves go up, and then there's a drawdown. Then it goes up, and then a drawdown. If you're a decent trader, and you guys know, I've went through 2 other drawdowns. The beginning of February, I had a $36,000 drawdown, and the beginning of, I think, beginning of April, I had like a $36,000 drawdown where Mick put me on roast my trades. So I've been through these drawdowns before, which is fine. But then the question that I'm going through is the correct way on how do I scale an account, and the correct way to manage taking payouts. So I've been going through all that, and I go through emotions just like you guys, and hopefully I can show it, and hopefully I could show you guys exactly what I go through. And I think this is going to be a really great opportunity, because I get questions about this all the time, is how do I deal with emotions? I'm like, you know what? It's hard. Like, how do we go through the emotional side? How do we get out of a drawdown? How do I deal with not being at my high watermark? And when we do have a drawdown, how do we get out of that? And then I'm like, well, I don't want to purposely get into a drawdown and kind of maybe show by example. Eventually one will come, and then maybe I could give an opportunity of how to do it. And so maybe this is that opportunity. I'm in the middle of a drawdown. I'm going through those emotions of like scaling in, scaling out, increasing my daily loss limit, now decreasing my daily loss limit, changing my position sizing. so many other things, right? Because I always tell Rips, my trading buddy, and everybody else is I am just an average trader like you guys. I don't have a multi-million-dollar account. I don't have fancy, beautiful cars and these big fancy houses. I drive a 2020, you guys know exactly what I drive, a 2020 Honda Civic, where the first thing I do with my payout was new tires on the car, and then I put the rest into a savings account after I filtered it through an LLC. So that being said, let's get to some more of these questions before I continue to just go on to a bigger rant. What does it mean when the NQ and gold move in correlated fashion? Nominally, I expect them to move opposite to each other. Interesting. What does it mean when gold and the Nasdaq move correlated fashion? I don't know. I've never really paid too much attention to how markets move in correlation and let that affect my trading. You could talk about economics, right? Like microeconomics. You could say, hey, when interest rates rise, gold goes, should be going up or down. When bonds rise, equities should do this and vice versa. But I found there's a lot of traders that get caught in that, myself included, where I'm like, you know what? We had this type of inflation. Bond, yields are going up. Yields are going up. Market should be doing this. What I think markets should do, typically the markets does the opposite, and then they take my money. So definitely I do not trade market correlation. I'm not saying that that's not something that you could pay attention to. I do believe that correlations mean a lot to the market. But when it's to my trading from a technical standpoint, it doesn't mean too much, because when I'm trading a market, I typically only look at that market, and I don't pay too much attention to what, for example, if I'm trading Nasdaq and the little increments of what gold's doing, it doesn't mean very much to me. Now, if gold just shoots up 3%, then yeah, I'm like, okay, something's going on in the market that I do not know of. It is always nice to be aware of what's happening in the markets, but I'm not going to say, oh, gold, maybe right here, Nasdaq is bouncing. Nasdaq, maybe this was the bottom of the Nasdaq, and we're starting to rotate back up to 19,100, which is actually looking like a pretty good trade. We're starting to break out of this range, and we're starting to push up. So now, if I go over to gold, right, or even say Nikkei, I'm like, okay, Nasdaq's rallying. Does that mean the Nikkei, the Japanese market, will start to bounce as well? And do I play that? Not really. And a lot of traders do look at like the DAX, the dollar index, VIX, and all these other things, which is important to watch. For me, it's just too hard for me to pay attention to so many things in the market. I like to keep things maybe very simple in my trading. But if something moves a lot, and then it's nice to be aware of it. All right. When are you trading the London session? VR. I'm still waiting on approval for that in terms of like my schedule. So still, I know I said the beginning of this month I'll have a better detail, but my sleep schedule has been rough. It's going to be soon, guys. Like, I will have a London session sooner rather than later, but I don't want to change the way I sleep, especially when I'm in a drawdown. I'm going to focus on my trading first before I'm like, okay, I'm going to stay awake. During the London session, I'm going to trade it. I want to focus on my health. I'm going to focus on my trading first, and then focus on the things that are really important. And then I'm going to say, okay, I could start to have a London session and do that. But I will be having a London session, and that is going to be one of them. Rips is there. Maybe I go down to Las Vegas and maybe we get into a WSOP event. That might be. Vegas is so hot right now. I like the cold. I'm a cold weather person, and maybe I come down there to Vegas and get into a WSOP event. As long as it's indoors and it's, air conditioning, I'm fine. But you're not going to catch me outside on the streets in Las Vegas in that type of heat right now. London session does start at 2 a.m. Central Standard Time. So I would have to stay awake till 2 a.m. or wake up at 2 a.m. Central Standard Time to trade the London session. I just don't see myself doing that right now and not this week. But I will work my way up to getting it sooner rather than later. But no solid date. Stephen Hollywood. I just passed 2 combines, separate XFA, last week, and today I'm too nervous to trade them. How would you recommend that I get over the fear of blowing my XFA? So I could say the majority of you guys in the chat probably has felt the same thing. I felt the same thing. Is you pass a combine, you get an XFA, and then you have feelings of nervousness, fear, hesitation to trade that XFA. And there's some traders that are saying it, and I do strongly agree. Scale down to micros, trade micros, right? If you're trading the Nasdaq, there's the MNQ, which is only $2 per point instead of $20 per point. Trade exactly the same. You want to trade the same system. Maybe you look to make 10 points a day. Try and trade exactly the same, but trade with micros. And then when you start to feel confident, then you can make that switch. But micros help. Micros help. Just repeat that. Micros help. When you get emotional, stop trading, trade micros, or switch to a demo account or combine. But I recommend micros because I have a hard time switching to a combine or a demo account because I feel like I'm missing opportunities. But at least if you're in the micros and you make a little bit of money, it feels good, right? You know you're doing something right. If you make $50, $50. If you make $20, it's $20. But it's really 100% the psychological side of trading. And Neil says, let's see. Austin Silver says focus on $200 a day. Yeah, I mean, $200 a day, it's not, I don't want to say it's not a lot, but if you're trading micros, that could be a good target. Maybe even $100 a day or $50 a day. Set yourself up some type of a target, trade micros, get confident, because it's going to take time. And with time, with experience and time in the markets, trading XFAs, then you'll slowly get out of that type of feeling. Segi, this is a good one. This is one that I am in the middle of right now. When you're in a drawdown, do I ever change my strategy? And after so long, or you keep going? So I'm going through this right now. And while I'm in a drawdown, do I trade my strategy? No, I do not change my strategy. Because I do know, and it's just part of something that since I've been trading, I know it's me. It's not the exact strategy, right? I'm saying, do I change my strategy in terms of technical analysis and support and resistance? No, I do not. But what I do when I am in a drawdown is I take a moment and I say, how are my entries? Like, am I getting in too big too fast? Am I risking too much or too little? Is it me? Is it my psychological? Like 9 times out of 99% of the time, 9 times out of 10, 99 out of 100, it is me. And it is the psychological side of me that is the reason why I'm in a drawdown in terms of getting out of the drawdown. Because drawdown is part of trading. Regardless of what kind of a strategy you have, you could have the best strategy in the world. You will be in a drawdown. That's part of trading. But what matters is how we get out of the drawdown. And for me, it's the psychological part. And that being said, from the psychological part, I'm going to be trading my live account. But then I'm also doing something that I've been trying to do for a little bit. And that's I've been practicing on Topstep X. So here's Topstep X. And this is where I have been practicing. And traders have loved trade copying. And it's one of those things where it's like, you know what? Everyone loves trade copying. If you can't beat them, join them type mentality. I'm like, okay, let's do it. I'm going to start 5 combines. I paid for these combines. I had 2 others. I blew these combines. These were 2 combines I blew. This is my coach's account, so it's not really a combine. It's just something where I could get the data feed and practice on the markets. But here's 5 combines that I can go through and I can get funded on these combines. So I've been copy trading these 5 combines, trying to get back into rhythm, say, okay, it's not my live account, practice. How do I feel emotionally when trading combines? Is combines a big issue? And yeah, and maybe if you guys believe this or not, copy trading, and I didn't think I would be saying this, copy trading has helped me a little bit from the emotional standpoint. And what I mean by that is if I place a trade on this account and I could trade smaller, so I forget I'm copy trading. And when I was trading this, I completely forgot about those other 4 accounts. I was trading this like one account, and I'm like, okay, one account, focus on trading one account, and like 1 contract, 2 contract, 3 contract, and I was just trading normal, and it felt good. And I say normal being like smaller size, a $3,000 daily loss limit, so a small daily loss limit, and I forgot about these other accounts. And then when I made a 40 tonight, so this is tonight, okay? So I made the $4,400 tonight on this short, and I'm like, great. I'm almost close to, I'm like a step closer to passing this combine. I'm like, oh, dang, crap. I'm actually copy trading for more accounts. I'm like, well, that feels good. So I get it, guys. It's hard. It's not... I do say, I'm like, well, I'm not going to be doing this in my live account. I'm not going to be doing it in my personal account. But from a psychological standpoint, it helped me, if that's weird to say. And so maybe I need to do that in my live account where I'm like, you know what? Go back, decrease my daily loss limit to 3,000, trade my lower reduced amount of contracts, get back into the rhythm, and just start back at step 1 as if I'm back at the beginning of the year, and just try and repeat, and just go ahead and go and build an account back up to 250K, rinse and repeat, and do it again. So we'll see how this goes. I'm going to continue to trade in my combine, and then I'll continue to trade in my live account as well. And we'll see if I could go through and as I'm practicing in my combine, see if I could go through and get these accounts funded, and see how that goes. I'm interested. It's going to be fun. It's helped me from the psychological standpoint, and we'll see. We'll see what happens. I don't know. Who knows? Maybe I just maybe I just end up losing, like, I don't know. I don't know how it's going to go, but I feel like it's only right to practice and go through the same things you are going through, because I know a lot of you guys like to copy trade, and I know I preach just trade one account, and I am in favor for trading one account, and if I had to choose, I do say trading one account, like if it's your personal or your live account, is the right way to trade. But let's see how it goes. Maybe I learned something along the way. Maybe I could help you guys. Maybe I become a better coach by doing this in terms of how are traders trading, copy trading, how are traders viewing this, what are traders doing? I'm not sure. So that being said, oh, my mouth is getting dry. Let's get to some more questions, and I'm really tired tonight, and I haven't had dinner yet. So get to some more questions, guys. And I will be on Fast Markets tomorrow morning with Rips. Tomorrow morning is going to be fun. Rips and I will see what we can do in Fast Markets. Okay, Dakota, can you tell us more about the LLC you set up and how to go about that? Freedom Financial. The only thing I could suggest about LLC or taxes is go to a local tax advisor from where you're at, and they'll be able to give you the best advice possible. I can't expand, and I won't expand on LLC or taxes or anything for that. I will advise, and every single time I get that question, I will just advise, talk to a local CPA or someone local who deals with taxes and it's certified. Don't trust some guy on YouTube or some guy online about taxes, especially when it comes to taxes, because that is not something to mess around with, and I cannot recommend anything. Do I recommend level 2 data? If so, at what point do you recommend it? I do not recommend level 2 data for the way that I trade, because I trade using higher time frames, and for my slow markets, I don't really use level 2 data, and you guys see exactly how I trade. However, the instance that I say level 2 data would become in handy is if you trade during the New York session and maybe even during the London session. And Coach Jay is amazing with level 2 data, and Rips is also amazing with level 2 data, to where they're reading market flow, they're reading liquidity, where's the orders at the bid, where's the orders at the ask, and all that. So I don't recommend level 2 data with the way that I trade from a pure technical standpoint, using an hourly time frame during my slow markets. But I will recommend it if you're trading the New York session with under the way that Rips or Coach Jay trades. Or even Hogue, right? Hogue's great at reading that stuff and seeing contracts. I suck at it. I'm not that great. I'm waking up early in the morning. I've been watching Rip's stream. I've been watching Coach Jay, and I'm learning it. I understand it. I've spent time learning it, and I'm trying to learn a little bit more of it to see, is there something to this that I could implement with the way that I trade? Because I too want to become a better trader. I want to be a better trader during the New York session. I want to become a better trader overall. And if there is something to it that can help me become a better trader, I want to do it, because I've noticed last week when Rips and I was on TopstepTV during fast markets, I was trying to get into a trade, and then freaking Rips was like, "Oh, I see a seller. They're coming in to sell it again." And like, man, here they are. And I don't see it, right? And the next thing I know, boom, the market sells off like 10, 20 points. I'm like, that is good information to know. Like, if I knew that, maybe there could be some way I could implement that to my own trading, to get out of bad trades, or to understand the market's just a little bit better. I don't know. We're always growing and learning as traders. If someone says that they're the best, are they, right? Because we're always needing to learn. We're always needing to grow, because the markets are the most competitive thing in this world. It's the ultimate perfect competition, where we're competing against, billion-dollar companies and million-dollar algorithms, and it's the competition. And so just like the markets, we need to stay on top of our game. We need to understand we always need to continue to improve. And it really is just us against ourselves. I'm not trading against any other person. And I do have that trading challenge out there, and I will always keep that trading challenge out there, because it's fun and it's for transparency. But when it comes to actually trading and improving my own trading, it's me against myself. And gold's starting to sell off again. So, yep, that's the way I view it, guys. I'm going to continue to trade and grow. I'm not the best trader. Obviously, you guys see that. I think that's it. How do you typically scale into a trade? Do you go full position size or add as it works in? Burton, I typically like to add, but it depends on the trade. Sometimes I add, sometimes I get into a full size. It depends on the trade. It depends on whether I'm buying it or selling it. I'm a lot more confident when buying the market. I'm a lot better at buying the market than when I'm selling the market. it depends on a lot of things, right? It depends on the risk reward is the most important for me, the risk reward. So there. How many contracts do you trade in 150K? It depends on what you're risking. Yeah, I don't have a set amount of contracts I trade. When I start with a brand new 150K account, it all evolves around my risk. My position size depends on my risk. If I'm risking, say, $1,000, well, $1,000 in crude oil and a 5-tick stop loss is completely different than $1,000 on the Nasdaq with a 20-point stop loss. Like position sizing, everything should evolve around what you are looking to risk in the markets. So with that being said, I hope that makes sense. I'll continue to elaborate it. I didn't have too much time to go into too many details, but some fun notes. Here's some fun notes, guys. And I love this aspect about Topstep is TopstepTV, just like the traders that you see on TopstepTV, when Topstep brings traders on, like they are looking for traders like you guys, traders here at Topstep, live account, to where you go in, you're able to talk with the Topstep team. You'll be able to join us on Topstep. Maybe you happen to get on during slow markets. I don't know. Like there is great opportunity to get you guys in. And here is the form that they sent me to where, yeah, if you want to join Topstep TV or if you want to like be on Topstep TV, there is that opportunity. It's fun. I recommend don't trade a live account doing it because there's a lot of pressure, but it's fun. And it's definitely nerve-wracking when you start doing it for the first time. And then, of course, the Stetson contest. I should have done that in one of my combines. I hope Coach Jay is doing it. But that Stetson contest where if you trade a combine only using pigs, like cattle, or not cattle, pigs, lean hogs, and you go through and you pass your combines only trading lean hogs, then you have a chance to win a Stetson hat, which is cool. I think somebody won it last time trading cattle. But that being said, I think I'm going to end it tonight. I think that's it. Oh, I just got a message. Sorry, guys. For everybody who hasn't left yet, there is an opportunity that there could be some exclusive giveaway solely for slow markets in the near future. Still waiting on the details. So not tonight. So maybe the end of this week, maybe early next week. I don't know. There's no details. Just tease. I get to tease it. Let's just say that. So thanks. Thank you. And Cami Capital. Welcome, Cami. Well, when we do a London market, maybe we do it with Cami Capital. That would be fun. But take care, everybody. Enjoy. Bye.